What's up, team? Traders War Room wants to thank you, the viewer, for coming along with us on this journey. Make sure you check out the description tab as it has links to online brokerage, social media platforms, and also everything covered in the video will have a link so that you can go back and research it at your time. Let's go to war.
What is up, team? Chuck with Traders War Room, and I'm back at you with another video. Listen, guys, I'm sorry that I didn't put a video out on Wednesday. I was kind of under the weather, and this is the first day in the past couple of days that I've actually felt okay in the afternoon. So I'm still dealing with a little bit of illness, but I wanted to put this out because I promised you guys a weekend wrap-up video since I missed Wednesday, all right? And there's a lot of questions and a lot of things we're going to go over, specifically talking about options. And because options is really trending right now, we're going to talk about the Greeks and how to understand them. So what I need you to do is like, share, subscribe, join the team, join the community, come with us on this journey. And as always, if you're ready, follow me and let's go to war.
Traders War Room wants to remind the viewer that everything covered on this channel is for education and entertainment purposes only. You are responsible for every move and decision you make within your stock market journey. Let's go to war.
All right, team. Hey, welcome back. Listen, let's talk about what happened this past week and let's see what the market did closing out on Thursday. So let's get at it.
So as we see, all three markets did very well, and especially the NASDAQ rallying from the beating it's been taking lately. Your market movers, most active, top gainers, top losers. I want to highlight ACY. We put that alert out there on the Facebook, Twitter, and in Discord. And if you capitalize on that and came out with some good profit, congratulations to you. That was a great move. It was a good stock to play, and it was a quick mover. Here's your sector performance. Energy taking #1 spot, infotech coming in 2, and communication services coming in 3. All of those took a beating the past few weeks, and they came back roaring today. I do want to highlight next week. I got a thinking from charts and from sentiments of what I'm reading and what I'm getting from research that oil and finances are going to make some big plays, and keep a lookout for the healthcare industry as well coming into next week. I got a feeling that those are going to pop, so keep those on your radar. Here's your futures as of today at 9:14 in the morning. Look at oil. I got a feeling, like I said, from what I'm reading and from what I'm seeing, I think oil and finances and the healthcare industry are going to do fairly well next week. Now, I don't know when. It might be early in the week and they may taper off, but historically, April has been very nice for stocks in the first 2 weeks, so I'm looking to capitalize some gains quick and get out with some profit. And here's why the market moved the way it did today. The S&P 500 cracked 4,000, and it was mainly based on manufacturing data and infrastructure optimism. We see that the Supply Management National Factory Index reading for March, which showed an increase from 60.8 to 64.7 just a month ago, okay? And this marks the index's strongest reading since December 1983 and easily beats the Reuters estimate of 61.3. So a good catalyst right there to give some upward momentum in the stock market. We saw large tech and communication stocks boom, okay? But we also saw those cyclical sectors like energy and financials perform well, and a lot of it was because of Joe Biden's new infrastructure plan that has a lot of optimism and a lot of investors hopeful for good things to come in the future. And then we had bullish analysts come out and say that they think with this new infrastructure plan that not just the big dogs will do well, but also small cap stocks, the semiconductor stocks. And we need to remember, when semiconductor stocks move, EV plays usually move, and when EV plays move, the lithium mining plays move as well. So those are all connected in this whole renewable energy, the environment plays, and all these things like that. So we need to keep a look on these stocks moving into next week and weeks after that.
All right, team. Listen, a lot of people are talking about options, okay? And options are a great way to generate some money, especially when you're kind of putting your feet up at this time with your longer hold stocks. I mean, we can only buy so many dips, right? We're not made out of money. And at some time, you just can't keep buying the dip. You just kind of have to sit and trust in your stock that you've chosen and just kind of let your price ride until the market picks back up steam, okay? So we're going to talk about options, but in order to understand options and really be good at them, you got to understand what's called the Greeks, okay? And the Greeks can get a little confusing, especially if you're new at options. So I want to go over the Greeks and actually show you some of the Greeks on some option plays that I have and show you how they differ. So right now, let's get into what are the Greeks. Let's get at it.
All right, please understand this is not an in-depth research topic on the Greeks, okay? I'm going to push out more videos throughout next week on the specific Greeks, but I'm just trying to give you a basic overview so you kind of have an understanding. So we're going to go through this quick, but I'm going to give you the bottom line up front and the bare bones that you need to know before you start going into next week if you're thinking about playing options. Look at GSAT right now. You got to know your underlying stock, and we're going to use GSAT as an example. It's an option I have, but right now at closing it was $1.38 per share. This is my option contract that I have on GSAT, and I have an option call because I think the stock's going to go up over time for 50 cents, and currently my average price for my contracts is 93 cents. Now remember, one contract is equal to controlling 100 shares of the underlying stock. As you see, there's my position. I got 2 contracts currently at $186 equity. My break-even point is at $1.30, so I'm already past my break-even point. My expiration date is 10/15. Current price is 93 cents, and my average cost is 80 cents. I'm up $26 overall, or 16.25%. Here's where you can find some stats. You can see the bid and ask spread. You see the mark where it's at currently, the high it hit, the low it hit, the volume, the open interest, and the implied volatility. But we're going to focus on the Greeks. And I want you to see it at the bottom. You got Delta, Gamma, Theta, Vega, and Rio. So isolating the Greeks, I want you to focus on Delta first, okay? You see my Delta for GSAT is 0.9467. And when we're talking about Delta, we're talking about how sensitive this option is to changing the underlying stock's price by $1 up or down, okay? Now remember, GSAT was sitting at $1.38. So say it went up, because I'm bullish on this, to $2.38, right? And I'm currently at 0.93, all right? We're looking at an increase, 0.93 plus 0.95 approximately, and we're looking at 1.88, so $1.88. Now times that by 200 shares, and you'll see that my equity in the stock will be $376 or $190 profit. That's how you make some good money when you're talking about options. And when you're thinking a stock is bullish, the Delta can come in very nice and help you out. Now, Delta is only at one particular time, and it changes over the course of the life cycle of the stock. So you need to pay attention to it because it's not going to be static. So the next Greek I want you to look at is Theta, okay? And as you see, Theta has a negative sign over it, and it's 0.0003. So what Theta is time decay, all right? And this is the value for every day that goes by, and this changes the closer you get to expiration. As you know, that I'm out until October 15th on this particular contract, and right now my Theta is extremely low, so I'm not even worried about this. But you'll look at some other people's time decays, and they'll be, 0.02 or even like 0.11. And so if it was, say, 0.11, you're looking at 11 cents a day that your contract is expiring, and that could be huge compared on to the price. Just imagine if I was decaying at 11 cents a day at 93. That would be, 82 one day, and then you'd be at 71 the next day, and just continued on. That's when you see people that are like, man, my stock is going in the right direction, but I'm not making any money. It's because time decay is killing you, okay, or Theta. So the next Greek I want you to look at is Gamma, all right? And Gamma, for me, this contract is 0.09. And what Gamma is it tells you how much Delta will change with every $1 stock change up or down. Now, remember, I told you Delta doesn't stay the same. It's not static. But your Gamma, you can think of Gamma as like an acceleration to the stock, okay, or to the Delta. And this is telling you that every dollar that Delta goes up and your underlying stock price goes up, your Delta is going to go up by that price. Now remember, these can only be 0 to 1 or to -1 in a put. So it'll continue to get closer and closer, and it tapers off the closer you get to 1. So gamma is the acceleration of delta for every $1 plus or minus that your stock goes in that direction, and it tapers off the closer that delta gets to 1. So next Greek is Vega. Now Vega is your implied volatility, okay? And remember, it's all based on that $1 move of your underlying stock up or down. So you can see that my Vega currently is 0.0011. So my Vega is minuscule. I'm not even worried about Vega at this time. But other stocks you'll see Vega be different, and we'll look at a couple other ones when I do the big long video so that you guys fully understand Vega when we get to Vega. But for right now, just understand that Vega is implied volatility, and it goes up or down by $1 increase or decrease of your underlying stock. Now the final one, Rio, you guys probably never even noticed Rio because it's not very significant at this time. Now it comes into play with certain stocks that have to do with how much value in the option changes plus or negative because of treasury bills and risk-free rate or interest rates, okay? So until that really becomes an issue now, lately you've been hearing a lot about interest rate, so we might start seeing a lot of Rio talk coming into option plays. But for this one, you can see that my Rio is 0.0021, minuscule again, so I'm not even really considering this. It's not on my radar, but we'll definitely cover it because it's important to know all the Greeks inside and out when we do the long video and we break each individual Greek down.
Right now, as always, this is the segment where we're going to go into the you pick it, I buy it stock. I'll give you 5 stocks that I've already vetted. They're good stocks. I wouldn't mind owning any one of them. And you guys are going to pick the stock that I'm going to buy on Monday. And right now, we're going to get into this next 5 stocks. I'm focusing this week on stocks that have been beat up recently. I think that some of these beat up sectors, they're going to turn around here in April. April typically is a good trading month, especially the first 2 weeks of it. So I'm hoping to capture some of these beat up stocks on the cheap, and then, you know, they just ride up and hopefully get a good return in the end. So let's check out the 5 stocks that I got it for you pick it, I buy it on Monday. Let's go.
All right, remember the you pick it, I buy it watch list challenge rules. There you go. I gave you 5 stocks. You pick and research the stock you think will do the best in the long run, and maybe learns a little bit about a new sector that you haven't looked at, and pick the stock. And the winner of the stock with the most votes, I'll purchase $100 of it on Monday at a time that I see convenience and the best bang for my buck within the market. Here's your list. And like I told you guys, I was really picking on sectors that have been beat up recently because I got high hopes for some of these. So I got a well mixture of different sectors in here, and each of these stock, I wouldn't mind owning either one of these. And remember, if it ends up dipping -10% to -15%, we're going to cut our losses and preserve capital. But this is a fun team building event where we're trying to get people to really look at other stocks and other sectors and not just focus on the normal trendy ones that everybody's talking about in the media and that are proven winners. We're trying to find that diamond in the rough and hopefully catapult us up into a decent return. As always, we review our previous ones. We've had to cut a couple of them because they ran into that -10%, -15% range. So Torch and OPTT. Sorry guys, we're looking at maybe picking you up in the future, but right now you're out of the watch list. But our very first stock we pick, OPKO, still doing okay. I mean, it's -5%. This thing likes to fluctuate. I've seen it +5%. I've seen it -6%. It almost was in consideration of being cut, but it's held strong and it's performed fairly well. I mean, I would like it to do better, but it's still in the keep zone, and hopefully we'll start to see it come back as the market starts to rally around, and hopefully April will be something positive for this stock. And listen, if it doubles, then I'm out. But until that point, we're going to keep rocking with it. The stock that was picked 2 weeks ago, not doing too bad. We're up 5%. I'm all right with this stock. I actually really like this stock, and I'm glad it got picked. So as you see, we're up 5.72%, and I still think that this is a turtle. This is a slow mover, but 5% is 5%, green is green, so we're rocking. And this was our last stock that we got last week, doing pretty good, up 4%. You know, I like this one. I got high hopes for this, and I think this will continue to keep going up. So we're going to rock with this one too. So we'll add the new one that you guys pick. We'll put that in there Monday. And then as always on the Friday video, we'll review it and go over and see what the winners and the losers are. All right, so let's look at one more that I'm bullish on for next week, okay? BP. Look at the underlying stock. Now here's my option, currently sitting at $1.01. This is my position. You see I got 2 shares. That's my equity, $202. My average cost is 87 cents. Current price is 101. I'm up $28, 16.09%. And now going over the Greeks like we talked about earlier, look at my delta, 0.64. So for every dollar that this stock, underlying part of the stock goes up, that's going to be my delta moving forward, but it's only good for one specific price, and it's not static, it will change. There's my accelerator, or my gamma is 0.21. My theta, or my decay, is about 2 cents a day. This is going to drop. There's my vega, about 1 cent, 2 cents if you round up. And there's my Rio, nothing significant, not even worried about it. Another way that most people look at delta, and this is just kind of a all-purpose generalized idea, is that you can look at it as right now currently I'm 64% going to be in the money by the time this contract expires. Now, it doesn't always end that way. This could tank come Monday, or next week some bad news can come, and then this entire Greek numbers that you see here could be completely different, and I could start rapidly declining lower and lower exponentially. But currently right now, I'm looking at a pretty decent payoff come Monday, and I could sell right now if there was no change, and I would still be up a good percentage.
All right, team, that's it. Hey, listen, again, thank you for, bearing with me. Like I said, I'm kind of still feeling under the weather, so I'm not as animated, not as motivated, but I still wanted to make sure that I captured this important trend moving into next week so that we are better prepared today than we were yesterday, okay? End goal, I tell you guys all the time, and the 4 principles: we're hidden, planning, training, managing, securing our portfolio for future success, okay? Because as always at Traders War Room, we look at the stock market like a war zone. Stocks and sectors, those are our battles. We do it together. We do it as a team. We do it as a community. And as always, if you're ready, follow me and let's go to war.